Hello everyone, welcome to Mirae Asset Sharekhan's quarterly results preview. In this video, we'll discuss about banking sector's Q3FY26 preview. Not just the numbers, but what it actually means for banking stocks and the markets. Overall sector view. What this means, the overall sector view on the banking sector remains positive. What this means is that while Q3 may not be a blockbuster quarter, banks are expected to deliver stable performance, which is exactly what markets like during volatile phases. On loan and deposit growth, for our coverage universe, we expect loans to increase by 12.9% year on year, while deposit growth to remain below credit growth at 10.9% year on year. Public sector banks are expected to lead loan growth with uptick of 13.2%, while private banks could see a loan credit growth of 12.5% on year basis. Segments like gold loans, MSME loans and vehicle loans should see good traction. Lower interest rate, GST rationalization and tax relief should further support credit offtake, which overall is a positive for banking sector. On margins and NII, net interest margins are expected to remain largely stable, plus or minus 5 basis points. While interest rate cut by the central bank will put pressure on yields, the cost of funds should trend lower with lower CRR, better liquidity and deposit repricing. On credits and cost quality, operating costs are expected to stay under control since major costs like salary hikes have already been absorbed earlier. On asset quality, the stress levels are improving in unsecured segments like personal loan and credit cards. Also, improving collection efficiency in microfinance segment should help reduce overall NPA levels. Gross NPAs are at multi-decade low and slippages are expected to decline further. What this means is lower credit cost ahead, which should reflect positively on the bank's profitability. Overall profitability is expected to grow at a steady pace, led by private banks, with PSU banks also delivering stable returns. What this means for the investor is that sector remains a steady compounder. Our preferred picks in this environment include Axis Bank, Kotak Bank, HDFC Bank, SBI and City Union Bank, where operating metrics remain strong. To sum it up, in Q3 FY26 for banks is about stability over surprises, steady credit growth, stable margins and improving asset quality. That keeps the banking sector well supported from a market perspective. Stay tuned for more quarterly results previews videos from Mirae Asset Sharekhan.
Investment in securities market is subject to market risk. Read all related documents carefully before investing.